What's up, YouTube? Welcome back to another video. Sorry I've been gone for the weekend and Monday, and yep, was a little busy. Was working a lot. Had a private gig I had to show up at on Saturday night. That's why I missed Saturday and Sunday. I had how would I describe it? I got a little distracted, and yesterday I started school. So, and then got a little distracted later that night as well. Um, so that's why I've missed a few videos. So I've got a lot to cover up, or not cover up, or cover, because a lot has happened in the last 3 days in the world. The first thing I want to cover is my portfolio. I'm just going to do a little brief walkover, just put my thoughts into it. Um, Here it is. I did a lot of research on campus yesterday, spent about 3.5 hours doing different valuations for each company. I'm gonna just go over all of them real quick. So Google, I bounced around with 130 to 150 for my target or buy price or fundamental valuation, whatever the hell you want to call it. Um, Ended up with about 180 to 200 sell price or my price target. Biggest holding, so that one I'm gonna have to revisit for sure. And Caterpillar, you got 328, 451 if you want to see. Here's the Caterpillar DCF. Um, Everything for this whole Excel document is just linked together. So when I eventually come up with a buy price for CAT, it just immediately gets put here. So there's no point in really showing the DCF like that again. NVIDIA, I was a little surprised. Got a 59 or 60. I feel like a big reason for that, the highest valuation I got was 88. Um, I feel like if I took away this, it's just 60. Wow. Okay, interesting. I thought it would change. Still about $60 is my fundamental valuation with a sell of about 80, so we're way overvalued right now. But like I don't think we ever talked about on this channel, NVIDIA is based off of forward earnings. Future earnings is basically what that is, and future growth. Just to put in perspective, for a $3 trillion company, damn near, I gave it a 43% growth rate and it only got to $60. A little concerning. Lennar gave me beautiful numbers, so we're gonna keep that one. PayPal gave me amazing numbers as well. Uh, CRM, I was a little confused, but earnings are tomorrow, so I sold some before earnings. I need to adjust that. It's not adjusted right now because it happened. I sold about 30 minutes ago. Um, so I sold about a third or 2/3 of my position. I think it was a third of my position before earnings, just to see if I can catch a big beat and then sell as well. Amazon, I already expected this is about going to be about 170. Merck, I was a little disappointed in. Um, I got a valuation of 92, so I was a little confused. I'm definitely gonna have to go revisit this, um, but there it is. I do the multiples approach for my DCF, and then I average it as much as I can using walk as my discount. Um, Trying to come with the best, most neutral. I try to be as conservative as I can. Um, Disney, as we knew, is already undervalued, but I'm at 5% for my portfolio weight. Anyways, that's the portfolio. Next I want to cover really quickly is J Powell. Let's see if I can even, yeah. So I have this on the other monitor right now. J Powell spoke in Wyoming this last Wednesday. I'm just going to cover some of his quotes from the meeting that I found the most interesting. I'm trying to speed this up. I don't want this to be a long video. We do not seek or welcome further cooling in labor markets. The time has come for policy to adjust. So this is a very dovish comment, and by dovish I mean that uh, what's a good definition for dovish? If I can't explain it, I should probably just read a definition. That means we both learn. Supporting discussion or the no, dovish meaning finance. There we go. A stance or approach taken by a central bank that is geared towards stimulating economic growth. So in this scenario, stimulating growth would be cutting interest rates or making them, yes, so cutting interest rates, lowering them. They're at the highest they've been in more than 15, 20 years. So it'd be a great thing for them to cut them. We're going to go back to my portfolio just briefly to cover some of my interest rate plays that I have. One is going to be IWM, which covers the Russell 2000. If you didn't know, Russell 2000 tracks I guess, the smaller companies in the US. 2000 companies make up that index. Some of them are going to be Carvana. I think Supermicro's in there as well. A bunch of these companies that utilize a lot of debt to stimulate growth. So when interest rates are cut, you're going to see a big jump in the Russell 2000. If we go look at IWM, here we go. So this is about when I was buying about right here. Anyways, this is the bear markets of 2022 right here. And then since interest rates have been remaining high, it's just kind of just bounced up and down and consolidated. And now that we have talked and have thought about interest rates being cut for a while now, we saw it break out of that long consolidation and we're looking for it to move higher. I'm anticipating it to break all-time highs, so that's kind of why I'm holding it. Next interest rates play I have is the TLT. TLT tracks a 20-year treasury bond. If we go look at TLT, TLT is the inverse track of, basically inversely tracks treasury yields. So when treasury yields drop in anticipation for interest rates to drop with them, you're going to see a spike in the TLT, which is why I've been buying it. Again, if we talk about the bear market of 22, and the bottom and the highest interest rates reached was October of last year, and been buying it since. I think anything under 100 is fair game. The last time they were this low was recessionary periods in 08 to 2011. So that's why I've been buying it there. We're going to cover a few more interest rate plays that I have. Lennar is going to be one. Home builders really benefit from interest rates being lowered, allows their margins to expand once those interest rates are cut. Any financial company, JP Morgan, any other diversified bank would benefit greatly from interest rates being cut. They can make a lot more money. American Express would benefit more. It's a credit card company. Interest rates directly impact their core businesses. Caterpillar uses a lot of debt for its business, so you see interest rates go down. It's going to stimulate some more growth for the company. Yeah, so see, basically what I'm trying to explain is I'm trying to position myself for the inevitable rate cuts. Now that we are still talking about rate cuts, I'm going to pull up a chart just so I can explain it to myself and to other people and the audience, if there is an audience. If we go look at, pull it up. This is my favorite website, interest rates. No, wrong charts. Federal funds rate, there we go. So I actually recorded a video about this interest rates on Friday or Saturday, covering over this, but I never edited it like I wanted to. It needed editing, and I hate editing, so I just never ended up uploading it. Yeah, so we're going to cover over rate cuts in the past. So the first one we're going to visit is the most recent recession we've had. which is 2020. And as we see here, when interest rates begin to be cut, we have that recession. Now we're going to visit 2008 to 2011. Oh, I guess in this point it's 2007. Interest rates were high in 2007, and nearly as soon as we started cutting them, we had our recession, which lasted a good old time, mid of 2009 from mid of 2007, a 2-year recession. Next one that I remember is 2002 to 2000 or 2000, early 2000s. Same thing. Basically what I'm trying to get at is recessions typically happen. Why is this messing up? Recessions typically happen when interest rates are beginning to be cut. The next one I believe is about 1990. Same thing here. We see interest rates beginning to be cut, and then we have our recession. It is out of the 62 years that this chart has been active, I've gone through this chart in the last video, I think only one occurrence happened where there was a recession that happened during the rising interest rates, which is 1980. Um, I want to study the 1980 recession because I don't know a lot about it because I want to learn why that happened. Um, but it looks like the Fed was very behind on what was going on, which is why you see them continuing to raise interest rates to 20% during a recession, which is awful, but then they lowered it again. Very, very interesting. So I definitely want to go read into that and learn more about it. But then we go look at the one in 1981 to 1982. We see what I was pointing out earlier is that when they start cutting interest rates, that's when the recession typically begins. I think the next one is 73. And we see something similar. But again, it seems like the Fed was a little behind again in 74. But like I said, most of it happens when interest rates are cutting. The other ones are what we have on this chart are 57, 58, and 60. That's as far as this chart goes. But say we take out recessions. Where do we think the recessions are going to be on this chart? If I had to guess, 2020, 07, 2000, I don't know, somewhere around 1990, maybe early 80s. We're going to see probably a lot of stuff happening in the early 80s. 74, 1970, 60, and 58. Wow, isn't that convenient? So, what we're seeing here in where we are right now in the 2023-24, we're seeing interest rates being left alone, not changing, not dynamically changing like they have in the past. We don't see this very often. The only time we've seen this is 2007. So it makes me question, are we going to see a recession when interest rates begin to be cut? Because that is typically what happens. Damage happens in the economy no matter what when interest rates are risen to this extent, and most of the time is invisible to the eye until interest rates begin to be cut, because you can't raise interest rates and nothing happen. It just doesn't happen. So we're going to see what happens in the coming months. We're probably going to see an interest rate cut in September. I hope you all are prepared for both sides, the bull case and the bear case. No recession, recession. Make sure you prepare for both. That covers Friday. Saturday, was there any news? There was news about Google. I don't know if we covered that in the last video. Um, Google. Let's go look at Google. Google had news that the DOJ is looking into split it up. This is a bull case scenario in every way, I believe, because when you break up Google, that means you have more CEOs taking care of each company, YouTube, Android, Google itself as a search engine, etc. Meaning more growth opportunities. You have more, if you cater to each business solo, like by itself, more growth is going to happen. So bull case no matter what. You keep Google by itself, how it is, $200 price target. You break it up. If I see it's starting to break up, I might hold it longer because I might get a fat bag from that. Sunday, um, I didn't do any research to update my watch list on Sunday, so we're just gonna go over what's been going on. So here is crypto going back to retest this. The levels we painted off, is it gonna go back inside our consolidation? I don't know, but it bounced off of it. Let's look at Bitcoin, which is typically just mimics total crypto market cap. Ethereum, behaving like Ethereum. Um, Not a big Ethereum fan. I typically stay away from it. Solana is typically what I like instead. It's behaving a lot better. Wow, look at that line or level we pointed out. It's almost like it bounced straight off of it. SPY, today we see it bouncing off of the 9-day moving average. Bullish, bullish, bullish. The Dow made a new high today. I do know that. So we're still in a bull market. QQQ had a bullish day so far. UNP, wow, almost like I pointed this out. AMD, I might switch my NVIDIA out for AMD. I was talking about Boeing. This is more complicated. I would play this with options. Microsoft, a little bearish on the charts. Looks like we might be starting a consolidation. Apple, bullish, because we just announced, if you didn't know, we announced the new iPhone event, which is happening in, I believe, September. Not sure. I think that covers everything. If I'm missing anything, let's pull up Wall Street. I hear my headphones dying. Let's see what's going on today. Yep. 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 We're seeing nothing but bad news. Weak German consumer confidence. Canada to tighten temporary foreign worker programs. German increasingly in trouble. China, yep, inflation usually hits harder for poor families. Oh wow, didn't know that one. Time has come for rate cuts. Anything else? Barron's? Just gonna bounce through all the news to see if I can. I prefer Lennar over DR Horton. We talked about this. I'm gonna go look over Airbnb later today. I'm gonna be back on campus and can research Airbnb. Might make a video about it. People are talking about Chipotle. Anyways, I think that about covers it. I'm gonna go look at Market Watch. Piss off. More talk about Kava having insider selling. I saw that this morning. I forgot to mention it. Not surprising. So I don't know why we're getting 8% slide after. Yeah, doesn't make sense. People should have saw that coming. You see a company that I'm pretty sure is unprofitable still sell that much stock. Of course they're going to. Yeah, that's it. Hopefully you enjoyed the video. Please leave a comment if you have any ideas for me. I'm going to continue to update Smart Portfolio because I have a lot to work on. I've been putting it off. Selling Salesforce, probably going to be selling some NVIDIA as well before earnings, which is, I think, tomorrow or the day after. Y'all have a good rest of your day, and I'll see you on the next video. Peace out.